Now, if you're a dividend investor, and specifically if you're sort of newer to dividend investing, this video that you just came across for whatever reason could be a very important pivotal moment for your investing career. And that's because I'm going to simply explain to you and share with you the math behind how just a $500 investment on a monthly basis can compound into a massive fortune. Later on, it can even surpass your entire job salary on an annual basis. Now, the power of compound interest and building a dividend snowball is something that absolutely shocked me in my early days of investing. And honestly, it's pretty crazy to say, but over the last 7 or 8 years now of investing consistently, I've built a dividend snowball that's compounding out of control just as of recently more than ever. So if you want to see the actual numbers, the actual math, and the process on how an investor with just $500 per month could potentially surpass their entire job salary on a yearly basis, all the ins and outs and everything included, make sure to stick around, drop a link down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, for this video's example of showing you how just $500 per month could surpass your entire income, which seems too good to be true, but I promise it's not, we're going to be utilizing the Schwab US Dividend Equity ETF as an example, but keep in mind there's plenty of other high-quality dividend growth style ETFs across the market, and I make videos and talk about them all the time throughout my channel. Now, some names to be specific off the top of my head: ticker symbol VYM, ticker symbol DGRO, DGRW, or even ticker symbol VIG. But for this video's example, we're going to be utilizing the Schwab US Dividend Equity ETF, and that's because this ETF historically has paid a ton of dividends and just keeps raising their dividends so much to the point to where it's a perfect compounding vehicle, in my opinion. Now, just to go over a brief overview of SCHD, because again, a lot of you guys watching this video maybe haven't really got too deep into dividend investing yet, but this ETF has a very simple objective. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, if you want to see a deeper in-depth dive into the Dow Jones US Dividend 100 Index, I've made videos on this before, so again, scroll through my channel, and I can also make more videos about this in the future. Just comment down below. But the reason SCHD, for example, has been so magical over time is that the ETF is cheap to hold on to with a total expense ratio of just 0.06%, but along with that, the ETF offers tax efficient dividends and again focuses on buying into names, different individual stocks that historically have paid and raised their dividends consistently. Now, what specific stocks are you getting exposure to when you buy into SCHD, for example? Getting exposure to names like BlackRock, Cisco, Home Depot, Bristol Myers, Chevron, names like Verizon, Texas Instrument, Ultra Group, UPS, and Pfizer. Now, there's around 100 different names within SCHD, so again, you're getting a nice diversified basket of holdings by just buying into this one. Now, again, you're probably saying that's all great. SCHD sounds just fine, but again, how can I compound a $500 budget into potentially life-changing money later on that's going to surpass my day job? Now, another glimpse of how this can be possible is that over the last 13 or so years, SCHD was trading around post-split price at $8.50 more or less. Now, as of today, it's trading at almost $30 per share. So not only have you over tripled your investment if you bought into this one just 13 or so years ago, but also this is where the real magic happens. 3.53% starting or trailing 12-month dividend yield. Now, this means that for every single dollar that you buy into SCHD today, you're going to be receiving around 3.5 cents on a yearly basis for every single dollar that you put in. Now, you might be saying that's going to take a ton of dollars and a ton of time for me to ever get to the point to where my cash balance is going to generate any significant amount of income and or surpass my job like I keep saying. But the reality is that over time, SCHD, as you can see right here, and again, of course, do your own research, look into whatever stock or ETFs you're interested into. But again, SCHD is a great example of a compounding machine of an ETF. Now, I say this because since SCHD started, this ETF used to pay around post-split 4 cents, 5 cents per share per quarter in dividends. Now, just 13 or so years later, we're talking 20 cents, 27 cents, 25 cents, and just as of recently, 26 cents. Now, again, let me repeat that. When this ETF started 13 or so years ago, which again is not that long in the grand scheme of investing, investors are receiving around 4 or 5 cents per share per quarter. Now, just as of recently, 25, 26 cents per share per quarter. That is a massive increase in income for investors that held on and did absolutely nothing else. Not to mention investors that held on over that last 13 or so years have also seen their actual net worth and their portfolio grow significantly. So hopefully that gives you guys a little bit of an idea on how this could be possible and how a relatively small portion of income consistently invested into something like this could turn into a boatload later on and allow a dividend snowball to start to compound. But But it's time to get to the actual point of the video and share with you guys the actual numbers. A $500 per month contribution to a portfolio would be $6,000 per year. Now again, some of you guys are going to have way more to contribute per year. Some of you guys are probably going to have way less. A starting principal amount of $10,000. Now again, you could start this with $1,000, you could start this with $1 million, whatever the case might be for you specifically. And we're going to go over a few different examples, so stick around. But just to give you an idea, a $10,000 starting principal, $500 per month from there, a 3.53% initial annual dividend yield, which is what SCHD offers, an 11% expected annual dividend amount increase, which is even on the low end because SCHD has offered more than that over certain time frames, 6% annual share price appreciation, again, just estimation. We don't know what's going to happen in the future. Maybe SCHD cuts their dividend in the future. We don't know for sure. Now, 30 years invested with quarterly distributions, which are going to be dripped into more shares of SCHD. Now, just one more second before we go into the actual numbers, this doesn't seem like a substantial amount of money, and it does not seem like enough money to turn into a dividend snowball that's going to surpass your day job, right? Well, if you said that, you're absolutely wrong, because over the next, say, 30 or so years, you're going to see your portfolio start off at $10,000 and pay around $357 per year in dividends. And over the next several years, with those $6,000 per year or $500 per month contributions, you're going to see the portfolio surpass 100K within just 10 years. Now, the portfolio's dividend income is going to get up to the $20,000 per year range just within around 16 or 17 years. And again, that's substantial considering we started with just 10K. Now, depending on what your salary is, what your expenses are, again, these are all just estimations, but I just want to make the point, especially for newer investors watching this, listen closely. It does not take $1 million or even $100,000 invested to turn into a boatload of wealth later on. It just takes time, compounding, and staying the course. And for this video's example, for the numbers we used first off, we're talking $53,000, $65,000 per year in dividends, just after around 21, 22 years. Now, if you're, say, 25 years old or 27 years old, whatever the case might be, and you started a portfolio with $10,000, $20,000 and you contributed consistently, well, you just do the math yourself and look, at least theoretically, what the portfolio could turn into. Now, what's crazy is that even if we kept everything else the same, but only started with a $5,000 principal, and again, $500 every single month from there, the portfolio would still reach massive heights just after, say, 10, 20 years. And while I'm sitting here trying to think of any other criticisms that some investors might be having while watching this video, they might say things like, well, I don't want to wait 10 or 20 years to build a massive portfolio. Well, in that case, you're probably going to have to invest a little bit more consistently, because then the portfolio will probably grow a lot faster consistently. But regardless, I just wanted to make the point very clear as day, that a relatively small investment consistently over a set time frame does have the power to not only surpass your salary, but also leave behind potential generational wealth on top of that. But I urge all of you guys to go through and mess around with one of these free online dividend calculators, type in the amount of money that you think you could start off with or maybe get to, and mess around with some different stocks or ETFs and just sort of dream about what things can look like in the future. Because this is something that I did in my early days of investing. I built out so many theoretical situations, and what's cool is that even right now, I currently own a portfolio that pays me north of $90,000 per year in dividends. I consistently still mess around with dividend calculators in different situations and sort of wonder what would happen if I bought this or bought that over a set time frame. So now that I proved to you guys that just a $500 monthly contribution could not only turn into enough money to surpass your day job, but also, like I said, potentially even leave behind generational wealth. I lastly want to hear from you guys down below. What's a single stock and or ETF that you buy consistently throughout the market day after day? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.